Buying a house is really exciting, but has anyone shown you how much it's going to cost to close your home? You need to budget to close a home so you can be better prepared. And more importantly, avoid any last-minute surprises. Hi, I'm Nicole Muk with Compass in Princeton, New Jersey. In this episode, I'm going to show you the buyer's closing cost you can expect when you purchase a property in Central New Jersey or Princeton and its surrounding towns. So first, what is a closing cost? Closing cost is a fee paid during the buying or selling of a house. And this is in addition to the price you pay for the house. Both buyers and the sellers have closing costs. Let's take a look at all the costs a buyer has to pay during a real estate transaction. The first out-of-pocket cost is going to be the money you're going to use as a down payment. This is not really a cost per se because it is money that you're going to put towards the buying of the house. But it will leave your bank account, so it be considered as a cost. It is wise to get to talk to a mortgage person early in the process so you have an understanding as what kind of financing you're going to get. Once you know this figure, you're going to know what kind of down payment you need to prepare to pay for purchasing of the house. This is going to be the largest out-of-pocket expenses, so knowing upfront is super important. Let's take a look at the real cost related to buying a house, which you would not be able to immediately recoup if you were to sell the house. First, we have the loan application fee. Sometimes there's a one-time fee that one person has to pay when they apply for a loan. Some lenders, however, are dirtbags that they don't charge an application fee. Next, let's talk about the origination fees. Loan origination fees are costs charged by a mortgage lender to process a home loan. These fees are typically about 0.5% to 1% of the loan amount. Next, we have a discount points. A discount point is the fee you paid upfront in order to get a lower mortgage rate. Without paying points, you would typically pay a higher interest rate. Next, you have the appraiser fee. When getting a mortgage, the lender will have the home appraised by an independent third-party licensed appraiser. This is to ensure the home purchase price is acceptable. Next, you have attorney fees. Attorney fee will be charged by the lender who give you the mortgage. This fee covers the service provided by the attorney and is part of your closing cost. You will also pay an attorney fee to an attorney separately to have the attorney review the contract, negotiate inspection issues, and also attend closing. The attorney's fee can vary depending on where you are located and also the amount of work involved. Expect to budget between $1,000 to $1,500. Next, we have a private mortgage insurance. Depending on the loan type and the amount of a down payment, you're likely to pay a private mortgage insurance, or PMI for short. When you have a conventional loan, you will have to pay a PMI when you have less than 20% down. FHA loans don't have a private mortgage insurance either. They do, however, have an upfront fee called mortgage insurance premium. Unlike PMI, mortgage insurance premium does not go away even if you have 20% down. Another closing cost you can expect is a prepaid property tax. There are no escaping property taxes, and you will be required to pay your fair share. In most places, sellers are the ones who pay transfer taxes, so buyers do not have to worry about this part. Next, we have homeowner insurance. Mortgage lenders will often require their borrowers to pay homeowner insurance policy upfront. The cost of insurance will vary depending on several factors. We're talking about the amount of coverage, the size of the home, and the area you are located. One of the mortgage questions you might want to ask your lender is that whether you can pay the home insurance yourself instead of prepayment. Now let's talk about title fees. When purchasing a home, a lender needs to make sure there's a clear title to the home. Lenders do this by ordering a title search by a title company or a real estate attorney. The cost of title fees vary from area to area and company to company. Expect to pay the neighborhood of $1,000. Next, you have your title insurance policy. You will be required to pay a lender's title insurance. You might also want to consider owner's title insurance policy. Honestly, this is to protect you from bureaucratic incompetence. Common title defects include incorrectly filed, forged, or lost deeds. lien against the property, and any future encroachment that can occur. Now let's talk about flood insurance. This is pretty straightforward. If you're in a flood zone, you will need to have a flood insurance. But flood insurance isn't cheap. This is something that you will want to do your own research ahead of time. Now let's talk about real estate commissions. Most of the time, a real estate commission is paid for by the seller. There are situations where a buyer might be responsible for paying that. For example, you hired a buyer's agent who helped you find a for sale by owner property. Oftentimes, in the buyer's agreement, it will say you, the buyer, will be responsible to pay for the commission. But it's really not something that you should be worrying about because there are only a handful of for sale by owner properties. Commission can vary tremendously, but you can expect to pay somewhere between 2 to 3% of the home price. Lenders are required to show the borrower the closing cost involved in the purchase of the home. They do this at 2 separate times. One is at the time of the mortgage application, and then again with the closing disclosure. Closing disclosure cannot be given any later than 3 days before the closing of the loan. A loan officer should go over all the closing costs with the home buyer on both occasions. Lender fees can vary, so it is vital for consumers to understand that. Average closing costs can jump when a lender charges higher than expected fees. These 2 checkpoints prevent any unforeseen expenses for a buyer. It is super important for you to understand the closing cost upfront. This will allow you better budget for your purchase of a home. Your closing cost will ultimately depend on several factors. If you'd like to have a better understanding of what those costs are for you, I'd be happy to help. If you have any additional questions or something specific, feel free to reach out. For more real estate tips, please don't forget to subscribe my channel. Thanks for watching. I'm Nicole Muk with Compass in Princeton, New Jersey.